couple of weeks ago, a friend of mine called me and he said to me, Wilfred, why is it so difficult to find good private funds to invest in? Our family has now invested in like 10 of them, and 6 have done worse than the stock market. Is it then a myth that there are those private funds who do 3 times better than the stock market? Is that a joke? We only had like 2 small first-time funds who did better than the stock market. So should we actually go into this at all as a family office? He was talking on behalf of his family. And this question actually made me think, because a couple of years ago when we founded Heights, the company I work for, we saw this a lot. Because actually the answer is no. There are a lot of good private funds you can invest in, but you just should have the right data and the right tools. And I come back to that later. First, let me introduce myself. I'm Wilfred. I'm one of the founders of Heights. Heights is a firm which collaborates with family offices to build technology, bespoke, tailored technology, to optimize their investments in private funds, both in terms of their returns and in a way which aligns with their purpose, their way they want to make impact. I do this together with Pascal, so maybe Pascal, you can quickly say who you are. Hello, I'm Pascal. That's really quickly. And today we're here to talk about the topic conscious investing in the age of real-time AI. I'm really happy to see so many panelists, first of all, and the guests. So conscious is a word which is mentioned, and that will be really central today. It refers to the purpose. What makes you, you as a family office, as an investor? What is the thing which drives you? Where do you want to make impact? And this goes beyond profitability. It can be like really unique to your individual preferences, your values. Second, it's about real-time data, and we're going to hear more about that. And I think that's a real innovation. How can we use real-time data and AI on top of that? And ultimately, as we see in the later panels, how can we combine those two? So how can we have real-time data and AI in a conscious manner, which aligns with your purpose as a family office? Well, that's our topics we want to discuss today. But before we do, I give the word to Jean-Philippe, with whom we organized this event together, who will also share a couple of words.
Hi everybody, I'm Jean-Philippe. You can call me JP if you want, so after for the networking, don't pronounce the whole name, it's quite long. Together with Wilfred, we organized this day and to discuss about investments. And investments, the way you do investments are dramatically changing, because within here and 4 years, 5 years, we'll have a completely new generation that will take investment decisions. Today also more and more women are taking investment decisions than in the past. So other elements are playing a role in there. So elements like not only performance indicators, but also other values. So later in the panels we'll talk about values, we'll talk about which leads to consciousness, more consciousness and be more aware. And we're going to talk about how we can do that and how technology can be an ally in there. I'm the founder of ActionJ. ActionJ is a scale-up company, a global scale-up company that is transforming data into signals. And a cocktail of signals is predicting a company behavior or a fund behavior or whatever behavior you want to predict based on that cocktail of signals. And then the end user is giving a feedback, and this is retraining the algorithm, so you have a complete loop. So that's why it's in real time. But I would say enough about us. It's about the panel. We quickly gonna present the panel. Too bad for the panel. We are gonna do it to save time. So that's a smart move, we would say. But if you have the word, you can tell a bit more about yourself, of course. But I'll let Wilfred start presenting the panel.
Okay, I pick a couple of panelists, and JP will do a couple. There's Carla, a global strategy leader at the Boardroom Network for Female Leaders. Then I skip two, but we come to the other panelists. Yogesh. Yogesh is investor and founder of Mamsys. Mamsys is an IT consulting firm with a global presence in Europe, Netherlands, in the US, in India. Maholt, Director of Research Strategy at Versus, a cognitive computing company. And then the others I give to JP.
Greg? Yes. That's Greg. He is based in Berlin and he's working with Invest Hong Kong. So Invest Hong Kong is an organization that facilitates and promotes investments in Hong Kong. And I can tell you Hong Kong is a really thriving community of investments over there. So I was there 2 months ago and I can tell you that's really vibrant over there. Then we have John. John is a CEO, former CEO of software companies, and he's now working for Flanders Innovations, and he has quite a lot of experience of investments and managing tech companies. Then we have Martin. Martin works for a wealth company and for several single and multiple family offices, and they're quite a heavy user in practical terms of AI. We have Alejandro, and he's based in New York, and he used to be group CEO of SDG, one of the biggest consultancy in data and analytical companies in the world, that specialty. And he's now launching a new venture called Propeller Tech, which is enhancing or using deep tech to get some operational advantages and facilitations. And then we have Philip. Philip is a serial entrepreneur, mostly in AI, coming from the defense department where he worked into, like the hacking community and how to work against that and with that. So we have quite a eclectic panel on purpose, so we can talk about the subjects. And the first subject is about value-based AI. So about value-based AI, we had a first question about value-based AI, and that first question is very simple. How can we democratize AI? How can we work with that? Because AI is 99% of the time a black box. So that's what is happening today. You don't know how the results are made. So I'll give the first, oh, you already have a mic, Martin. So I'll give the first question or to answer to Martin. So do you have, in your experience, any practical examples how you work with democratizing AI or making it more transparent?
Yeah, thanks, JP. So the transparency thing I'll start with. Is that clear? Is everyone okay? Because it's really, really important to us in what we do, and we're using AI to invest in the stock market, basically. And we simply would not be putting our own capital at risk or clients' capital at risk if we didn't have some degree of transparency. The issue is when you're working with machine learning and you want to leverage the power that these machines have for decision making, as well as processing the data, by definition, you can't really know what the machines are thinking. So you have to find a way to encourage transparency in your process, in your inputs and your outputs, so you can get a sense for it and then have the confidence to make one of the 4 decisions you can ultimately make as an investor, which is buy, hold, sell, or short any given stock at any given time. And so this is one of the things that we had to really build ourselves, starting in 2017. And we tried to buy something off the shelf, but we weren't at the stage we are now with AI and machine learning, so there was nothing. And the key to us was to build in some means of transparency. And luckily, because we come from a kind of fundamental analyst background, we just said, look at all the things that we want to look at as human analysts, and these are your inputs. And when you're giving us your opinion as to which are the best stocks in the world, which are the worst stocks in the world, show us all the outputs, show us how those have changed, so that we can really get a sense for why you've changed. Okay, I'll give you an example. So in the pandemic, we had been holding Airbus for 3 years, till the beginning of 2020, and was on Bloomberg TV. Guy Johnson said, why do you hold Airbus? And we had this whole spiel about, it's like 12 times earnings, all the kind of usual metrics. There's this kind of thing going on between the US and China, so there's going to be a pivot towards Europe. Very happy with the answer. came into the office the next day, and the AI said, sell it. So there was an immediate red flush to the face, hugely embarrassed. But because we trust the AI on the kind of the sell decision, we sold it immediately. But normally we would have kind of had these emotional biases as a human, and rationalized why we should still hold it. We'd have said, all those things are still true, and yeah, maybe it's not going to be a proper pandemic, and so on and so forth. But because we had this output from the AI, we were able to go and do that, and we had this transparency of the outputs that showed us that the smart analysts who weren't so lackadaisical about the coming pandemic had started to downgrade the airline manufacturers, and there's therefore a lag in the performance of the kind of the travel industry, and there's a lag to the performance of the airline manufacturers. We were able to gain confidence to actually get out of the stock, and thank God we did, because it dropped like 65% in the following week.
Good move. So you see emotions.
Yeah, and having that transparency
exactly
gives us the ability to navigate those emotional issues that we have as humans.
All right, cool. Thanks, Martin. Next question is, we talked about transparency of AI systems now, but that is connected to that question, and I don't know who wants to answer that question. Will AI remain a closed system, or will it go open? Yes, you can take that one.
If we stay down the same path right now, the technology that we have, we're trying to patch their explainability problems. We're creating these explainability layers, and we're hoping for the best. So if we stick down this path, no. But we have other paths. There are other technologies that are now scaling up that allow direct explainability within the system. You understand the cause of certain decisions being made, just like yours. You understand how the data affects the parameters. So you can go down these model-based approaches, which allow you to read and ultimately affect the system as well to reduce the biases. So these are generally Bayesian-based, for example. And these technologies are now scaling and are now much more efficient even in terms of data than the black box approaches, which have been built just to throw more and more data at it. Well, we're hitting a data wall. There's no more data to throw at the models. So you now need models that are much more efficient and that have this underlying structure that allows you to understand what causes a given effect in the world. And then you can just simply fit your model to the data that actually comes through this agentic-based structure.
Cool, thank you. Greg, you want to react on that, or? Because you have a little bit more experience in the healthcare as well. So how is this this transparency, and also what I just said is, will it be open or not? Because in the healthcare, it should be more open. Exactly, everybody should benefit from that.
Yes, exactly. So the thing is, in the nutshell, normally we want to have a better communication with the best researchers on planet Earth. Okay, and then we have several countries, and then we have the industry, the farmer. Okay, they make it for profit. Right? But I was just amazed that we have so many tools, we have so many things. We have human data, we have cohort studies with health and not health volunteers. And I wonder, because it's about regulation, this is the health thing, that we always have the same medicines. And I say, why we not approve newer ones? Because I say, no, it's already working, it's about the price cut. But I think it's not only about the medicines, the treatment is actually also about the diagnosis. So I can imagine that we use medical AI for certain biomarkers, and biomarkers is, for example, for the early detection of CNS diseases like Parkinson, Alzheimer, and eye diseases. We have now the special age, the aging society, silver population. I think we could do much more when the industry also open up, because they have closed systems saying, you know what, I still do the profit, but they should create more organizations. Now there are certain associations where they say we have to team up. So several farmers are teaming up and say, you know what, we have to work on new things, even rare disease. So I think there's a kind of trend, it's good, but I think we need very special evangelists. We need people to discuss this, because it's better for the quality of life of the human beings. So cool. I hope so.
Yeah, thank you. Yes. So we have 1 more minute. Yeah, go ahead.
Especially on the healthcare, I fully agree, and I think there is another element that could be very important on healthcare. There is so much data, healthcare data, which is sitting around in all kinds of silos. Diagnostic information, after the fact information, and I think that's important, and especially in healthcare, that you bring that data together. but there's the whole privacy, data privacy, which is very important for patient data. But there are tools and techniques to overcome this, like federated learning, federated computing, where the data resides at the owner. And that's the thing what we try to push as well forward in Belgium, that those diagnostic information, clinical information, patient information, bring that together to do some research and advance in the world.
Yeah, I wanted to add on my side, in terms of democratizing the whole AI, it starts with the evangelism or education behind. I think the biggest stopper of getting democratized AI is the change that is in every industry. It's going to be so disruptive on everything that we do. Like, even if we put the healthcare, how is going to change? Like, healthcare organization, pharmaceuticals, we're talking about improvements, efficiency that is going to affect millions of dollars in the industry as we know it today. And it could go to banking, it could go in the way how we invest, because it will give decisions to the masses, like kind of what happened with the Robinhood app with GameStop. It was the masses, the one we're using. In this case, wasn't really AI used by the masses, but they were using the masses, the information. So I think goes into losing the fear of using AI, like, I mean, how you can blend with that, and it comes with education. Like if you know something, then you don't have the fear. If you keep it away, or it becomes more like a thing of a few people, then the inequality will go bigger in this case.
I would like to add just one point here in that we have to go and take one step back, understand what we are talking about. It is intelligence at the base. And we have seen how human intelligence has evolved over the centuries and millions of years. Now, it is all about information. If we have closed information, then it is limited to only certain people, so people will not be intelligent enough. Similarly, it goes for the machines as well. Fundamental aspect is how much we can open machines to what type of information. As and when we open it more, we will have better intelligent machines, which will be augmenting the human efforts. So that is what my take on that is. So we should have the open systems for the AI to learn more.
True, I agree with that indeed, but also I don't agree as well, because you need to get better leverage of your data you're already having. Having all the data open is an utopy. So we see what's going on today with OpenAI. Some data sources are being blocked. So they're stopping sharing the data because they always think in the old-fashioned way, I have more data than you, so I'm smarter than you. So I'm not a big fan of that, and I'm not a scientific believer in that. I think you can leverage data. That's why what we're doing for instance, we're translating data into signals, and the cocktail is predicting something on that. So, and sometimes that data is coming from the left side, and sometimes that data is coming from the right side. So this is it's a very interesting discussion actually. So how much data do you need? Do you need a lot of data? Do you need to be 99% certain in your prediction? Also a discussion. Is 30% good enough? So yeah, but that's another topic. So I would like to ask the last question for panel 1. Because we have like 3 panels, but we're gonna stay. And that's it seems to be a simple question, but it's not that simple. Can AI be creative? In the beginning, we said AI will never be creative, and the first thing it disrupted was creativity. But if you think further, we as human, we can pause. We can say, oh, I don't want to think today, or I don't want to be creative today, or I want to sleep, or I want to do this. Or I can take a break. A machine cannot do that. So you have like several things of looking at the creativity by machines, and I would like that Carla would answer that one. I think you're the best place to answer it.
So from my perspective, I think AI can be creative to a certain extent. But yes, I mean, we cannot deny the fact that it can create fantastic scripts, can actually put together music compositions, but there needs to be a human guidance to that. And so that's the important part, because the data doesn't have emotion. And so in order for creativeness to happen, there is definitely like this inspiration, motivation, encouragement that needs to go involved. And I also think of like creative industries in that regard with artists, and how they're also that composition with regulations when it comes to ownership, copyright. These are things that need to be also considered from an ethical perspective. So it's definitely, I mean, complex in that regard and to the extent of it.
So I love that perspective, and I think I'm going to add on to it. If we define creativity as two fundamental processes, which is you add categories in the world or you connect existing categories in new ways. Deep learning was the dream because it allowed us to not have to know the pre-existing categories in order to get actual results. So we believe that it could do something like structured learning. Unfortunately, it is somewhat limited. So that's why we think of AI as not really creative, because mostly we think of it as it connects existing categories, and to some extent, because of the statistical regularities, it can sometimes output something we don't necessarily think of right away, which feels like creativity. Some models, though, are able to do structured learning, realize new patterns in the world. And as soon as our models are able to do this, they will be creative, and perhaps even as creative as we are. Now, the beauty is going to be mixing the human entropy, this natural tendency we have to create new categories in the world, both materially and virtually, and mix it with the entropy we'll get from AI.
Cool. Thank you for this. We're going to panel 2, where we get a bit more. So the aim is that we're going from value-based to more technical, and then to the conscious decision-taking. So we're taking you to a little journey towards that. So that's the red line within the discussions that we're having. So if there's also a question from the public, please raise your hand, and if something is not clear or whatever. So we're like in a small environment here. That's the aim, to be a little bit interactive as well. So let's go to the next panel, and Wilfred, I will ask Greg and Zippo to change. So yes, Wilfred.
Okay. So we heard a couple of things about value-based AI. Let's now go more into technical aspects. There are two, basically, I would say. One is real-time data. So not the data of an industry report of 2 years ago, not even the data of yesterday, but today, like real-time. And the second is AI, this technology we hear so much about, which is maybe also a buzzword to some extent. And how can we use those for investing? And I want to start really simple by asking a question to Yogesh. You're an investor, seasoned investor, and I'd like to ask you, what do you think is the role of real-time data currently for investing for family offices or for any other investor?
Thanks so much. Very appropriate question from in the new era when we are talking about, because usually we have to understand the concept of what is the intention of a person when he is going for the investment. The first thing which goes in mind is definitely one thing is the growing the wealth, but then very important part is with what purpose that family office would like to associate themselves with. So there is an emotional aspect goes into it. As and when we grow the AI systems, there is only one way to grow that is to have appropriate data available for that learning. And to draw those conclusions which are emotional based are not that straightforward with the limited data. So what Wilfred, you are saying is that the real-time data definitely it will help a lot to the machines to think on those lines, but that is not something which is 100% foolproof. So that's where the intention of a person comes into play, and those particular data points which are not available in the data in the real time, which will come from the human mind. And those will have to be fed back into the system. That type of feedback loop will definitely help systems to decide better that what type of investments will have to be there, on in what form and which particular area of basically business they need to invest in. So that's what I would say on that. Thank you.
I see Zippo nodding. Maybe you want to add something to that? Or just agreeing?
I just want to agree completely. Also because we just talked about data has no emotion, whereas families, like human minds, have a lot of emotion. So I think for better decision making, the emotions part to be looped back, it's essential.
Yeah, so that definition is by definition indeed limited to the real-time data.
Yeah, and just wanted to add to that as well. I'm quite new to the family office game, running our own family office, but So far, we've seen limited use for it, in the sense that you have the saying that when you want to see a rational man go broke, give him more information. That's the whole risk that we're seeing basically when making the decisions of where to invest, how to invest. Mainly looking at private funds, investing in private funds as well, definitely, because we have an appetite for early stage. Private funds that go into early stage, for example, there are very few data points, right? Like when you go in stock, there's quite a bit of data points out there. Different risk profile, different maturity level. We're rather in early stage. And there we see that it's very difficult actually to get some signals out of the market to make it worthwhile of making decisions on that. Even more so, it might even become a risk, right? So the way we try to approach things is going more into a venture studio model, because we believe that actually the whole VC model is a very poor track record in deploying capital, extremely poor. It's like a functioning drunk. Well, with all due respect to VCs, but no, a venture studio model for us works better in terms of de-risking or having a better grasp on the risk profile of going in early stage, basically. So that might be a contrarian view. I don't know, but
yeah, I kind of agree with. I agree with that in that sense. Is that we work with a lot of family offices, and we see how decisions are still taken with data that is a year old. And we're saying, what are you doing? I'm not saying that data is wrong, but it's just one stream that needs to go into the equation, because a lot is happening in 1 year, especially when you go into the startup world and the scale-up world. It's a century a year. So this is things that are getting now with the new AI systems, and I'm not talking about LLMs and NLPs. I'm talking about predictive AI. I take this as a wide name, broad name, but in this predictive AI, when you work with real-time data, it's a completely different perspective.
I wanted to agree with Philippe. Like the approach when you're working with startups or companies that are just starting, it goes to the emotions. Like you need to meet who is the founder team, what is the energy behind, do they have this to run this company? Otherwise, like I'm not working with them. Like like you work with a business plan, but it's not real data. Everything is created. It's an idea. It's more, is this person or this team willing to take the idea to closure? In terms of real data and AI, the mix and I think not just for investment, for everything. I think what is changing is in the past we were having real data, big data, and they were calling, oh, we have real data, but we didn't have the tools to analyze all that real-time data. Now we have it. So now the data is becoming more operational. So we are making decisions right away there with technologies that are allowing us to do it.
Yeah, I can add maybe just from the public markets perspective, having heard and agreeing with all of your points in private markets.
Private markets, right.
The fact that it is real-time data or pretty close is really, really important when stock prices are traded practically every day. Some information changes. The market is in a way racing to kind of get ahead of that and predict the future better than the next guy. Because our performance is a zero-sum kind of game, basically. So you have to be really on point with the data. And so for some sorts of investors and strategies, it matters more than others. You have hedge funds that use high-frequency trading strategies, and those guys, it has to be second-by-second data. You've got us who have more of, like, let's say, a 12-month view on a stock, where if the machines change their mind a little bit, it doesn't matter if we trade it today or tomorrow. It's not so key. But as long as you're kind of more or less on top of the new data that's coming out day by day, you can stay current. And to your point, obviously, this data is ubiquitous, and it's more a question of how do you then boil it down to stuff that's useful for your decision-making process? And that, as Alejo said, actually is becoming very, very doable with the machines that exist in the programs. So.
Yeah. And I just would like to add that, to enhance the point that real data can be your true differentiator going forward, that is kind of like the data is the backbone of decision-making. And it's incredibly important going forward, even more than before. And so, of course, integrating that data, interpreting that data is your game changer. But without the data, you're pretty much going to stay behind. So real-time data as a differentiator, I think that's something that needs to be really much enhanced and kept in mind.
Okay, thanks everyone for the additions. Let's go to the second question. So we talked about the role of real-time data for investments of family offices or investors in general. Another angle you could take is the skill set, or maybe put it wider than just education, the awareness that family offices should have now in this new time of real-time AI and investing. A lot of family offices that I meet, even if they manage big portfolios, $1 billion plus, they have just a couple of analysts, maybe a data scientist, and that's sometimes a bit weird to me because they manage such big portfolios. So it depends a lot on these small amount of people who make the decisions, and that led me to the question, like, which skill set, or wider phrase, which awareness should family offices or their managers have to do proper and optimal investing? Maybe John, you want to kick that off?
Maybe you could use that example of reducing number of people.
Yeah. So it's like the democratization question, effectively. Yeah. So when I used to work in the institutional asset management world, our USP was the opposite of democratization. It was, we can afford to employ 800 analysts sitting around the world to help us gain some kind of information edge over our competitors. Since having a new kind of boutique, etc., and since we've been able to build our own machine learning system, we simply don't need to hire those analysts anymore. We run our portfolios with a team of 3 people, because the way we've designed the system is to do the job of all those analysts, do it better, do it in more real time without the cognitive emotional biases, turning up to work hungover, being sick, being varying in quality, all of those kind of things. And they can do so much of the heavy lifting that it makes our job, a lot easier, and we're actually outperforming those big guys, by a lot, as a result of embracing this technology. And this is something, it's a process that's going to put that sort of decision-making power into the hands of certainly family offices. If they've got a couple of analysts, they can do this. They can work with a machine learning company themselves to build it the way they want to do it. And that's kind of like, it's not what the man in the street would call democratization, but it's a kind of progression along that line to really give the power to individuals to kind of partner with these machines and make smart investing decisions, which is not always the case.
Can I add something to this?
Yeah, John, and then we go to Mahout.
And I think that's certainly a valid point what you're mentioning, but I'm working from time to time as a senior advisor for some private equity. And a couple of them have made as well, like you did in organization, an own data model, AI tools on top of it. But they use this concept as well as a selling mechanism to invest into new companies. When you're sitting into meetings, they use this offering to their, let's say, prospective investment companies they want to invest. Look, we have this model not only for us, but we will help you as well to do additional investments, acquisitions for your company. And you see that resonates with the people sitting on the other side of the table.
So you might want to have people who have this skill to understand what constitutes noise versus signal. So then what you can do, understanding that, is have people who have the skill set to just scrape everywhere relative to the signals you're looking for, and then do feature engineering like what you're doing. Or you can find dynamic causal modeling, which will take a lot of data and do that work for you of identifying what constitutes noise and what constitutes signal, and then continuously scrape and get this real-time data. And more than real-time data, you also have to factor in your perspective relative to the data and how your action is going to affect this real-time data, because you do exist in a second-order chaotic system. So these are the key crucial skills, and ultimately that can be a team of 3 people.
Like in reality, kind of what I was saying before with lobbies in the industry, inside the technology, there is also a lobby in the way how effort and productivity are driven. Like if you can get more money by doing something, why you want to do it for less? And that's the lobby that we were talking before. In reality, there are technologies that can optimize the whole thing. So it goes more to what you were saying. It goes more into the knowledge, the context, the business knowledge, and you can leverage technology to do that and gain productivity.
Thanks. And then it's that time already for the second, yeah.
You have time for one more question.
Okay. Okay. So we discussed real-time data and the skill set. Then maybe let's think about technologies. Which type of technologies can be applied on top of these real-time data to, to do two things. We discussed the purpose side also, but also to get just optimal returns. Yogesh, is that maybe something you want to add a comment about?
Yeah, sure. When it comes to technology, there are definitely, I would not go to much technical as in technical.
No
but
brand names.
It's just, yeah, that's so there are, I would say, I'll go back to the previous conversation when we talk about open and closed ones, right? So there are so many open technologies which are available these days. And important part is that how we improvise on top of those instead of going for the closed technologies so much. So intention is about, again, going back to the information exchange, which is very important. So we have to pick up the technology which is more information, I would say, conversant, and it can make more sense from the information which is coming from the real-time data, as well as from the feedback loop which is coming back to it from the investors or the home offices and that kind of thing. So the humans are the best people to judge about the technology, not the technology will drive the user of technology. I would like to say that.
Thank you. I think I'm going to point to specific technologies. So because you deal with systems that have high uncertainty and volatility, and you don't want to make a decision just to make a decision, you want to make a decision that leads you to a good outcome with high certainty. You want to deal with system that can deal with uncertainty and have that baked into the system. So any kind of technology that gives you these bars. The second part is you want to deal with time series. So the technology I would pay attention most is RSLDS, which basically is a recurrent linear dynamic system. So basically what you do is you have your system, you have uncertainty about the linear dynamics, and you understand when you switch from linear dynamic to linear dynamic. And this gives you a very good result.
Yeah, that's exactly what we're doing in our company. We're using a dynamic time series. Indeed, so we're going to do a little break in 2 minutes, and then we go to the last panel, and to do the bridge between what we discussed now to the last panel, which is the most interesting one, I would say, is that we discussed now, we heard stories, we had 800 analysts, and now we're dealing with 3 people because the machines are preparing everything and are digesting and are telling us when to go into contact, when to do the investment, when to approach this or that. So this is what is basically today. So the next level of discussion will be, okay, then what do we do as humans? And the machine are doing quite a lot for us. So this is starting to look into more of ourselves, how we take decisions in a more conscious way, because it will be all about relationships, because the machines will tell you when to contact, when to invest, how to invest, how to approach, etc., etc. You will be giving all the elements by the machine. So you will be giving the signals, and it will be almost or in real time. So, and this is the next level we're going to discuss then. So let's have a little break.
Yeah. 20-minute break, and then we come back. Okay.